Hey everybody, and welcome back. It is Wes with Pikes Peak Trades. Excited to give you another week ending video for trading that has ended here July 22nd, 2022. And let's just jump right into our weekly charts here. So if you remember last week's video, we talked about that weekly candle and the question of, is that a hammer that's going to follow through bullishly, or is that a hanging man that's going to then result in fresh yearly lows? And we got our answer. It didn't happen on Monday. Monday was a down day, but the next 3 days were decisively up. There were some huge moves, some big gainers to play this week. And then we had today. And today, this being Friday, we had Snap that for the second quarter in a row has somehow tanked the market. It's amazing how that works, but you look at the bottom line, and if ad revenues are down, then stocks that rely on ad revenue is going to get hit. And so of course you're going to see Roku, and you're going to see Facebook, and you're going to see Google get hit, and that weakness just spilled all the way over into the general market, and it turned into some questionable closes. Now, the weekly candle itself looks pretty strong. However, it was important, I think, for the bear thesis. So we'll start there. For the bear thesis for this weekly price to break the June 28 high, because now that's a much more clear ABC up, a three-wave move. And when we're talking about the potential for bear market rallies leading to fresh yearly lows here, if that is true, bears want to see this as a three-wave move up. So that is now in place. And I think after selling today, I think bears would say there's no reason for price to go any further. You'll notice it bounced right into a potentially bearish fib zone. It was rejected at upper pivots. There were even gaps that were rejected, gaps that I thought were going to fill today that did not fill. And so all of that from the bearish side, bears are protecting territory, so you have to at least give even odds to the bearish thesis. Now, on the bullish side, a higher weekly high is bullish, and there are still valid nested 1-2 up counts. So we are at that point in the market where next week is simply going to be decisive, and we've got a huge round of earnings coming in. All the mega cap tech companies are going to report, starting with Google and Microsoft on Tuesday. So we're going to go through all of that in detail. And I would just offer to you here at the close that I essentially see a really balanced set of evidence. And there's no reason to guess. I wanted to point that out as well. If you coming into this week were just blindly bearish and say, oh, there's no way we can set a swing high, after Monday, you look to be right, but then the next 3 days you got demolished. And if you're going into next week saying, well, there's no way that tech earnings are going to make the market go up, and we have to reject here, we're going to get fresh yearly lows. What if you're wrong? Because when I present to you some of the bullish counts, you're going to see that there are compelling reasons to at least just be flexible. So I am right here. What I would say, I'm very market agnostic. I am not biased one way or another. I naturally, just because of my personality and my choice of disposition, I prefer the bullish counts because that's when the most people make money. Bear markets hurt. And even some of the most bearish bears have trouble making money in a bear market. The biggest gains by far are made when the market is trending up in a healthy way. So at least be open to the possibility as you see the details of the counts. So let's start working down into the smaller time frames, and we get into the daily, and you're going to start seeing on the daily some pretty nasty candles. Now, with a decent close, SPX avoided a bearish engulfing candle. It closed back within the upper Bollinger Band, which I've been talking about all this week. We did get multiple days, consecutive days of upper BB closes, which had not happened at all in the entire bear market, and a sign of change of trend, some underlying strength, or just a completely overbought rally. And you're going to notice for the bearish thesis here in red, it's compelling. I can't lie. It's a reversal candle below an important gap pivot, a completed three-wave move up, and so absolutely we have to be on guard. Now, at the same time, look at how price this week, Tuesday, Wednesday, Thursday, and even today, recaptured and held above the entire daily moving average cluster. So that is a bullish development. If we're bearish, we're going to see that cluster lost quickly next week. And probably, I would speculate it would happen by Wednesday after Google and Microsoft report. And if we get earnings bombs like the reaction from Snap today, that's what's going to do it. So there are actually plenty of triggers there in place. Also, we're going to learn about Q2 GDP, and the consensus is that it's going to be negative, so we'll confirm a recession. So the question at that point then just becomes historically, how bad will the recession be? Will it be short-lived? And we'll be able to look at the stock market as a leading way to help that economy bottom a little bit faster? Or is this actually a bear market rally and things are just going to get much, much, much worse throughout the rest of the year? And absolutely, I'm open to that. And I'm just going to offer that if we lose this daily moving average cluster, then we're going to see stuff like we did in the beginning of June, and some downswings like we saw after the March peak. It's going to be there and it's going to be obvious. And we just let the market tell us. And we're going to have a plan to be able to play it either way. Okay, getting into the small time frame so you can see the details that distinguish accounts. There's that completed bearish three-wave move. And you could say that today either completed a full impulse down, which would probably look the most complete, I would say, on XLF. We'll talk about that. Or we got a 1, 2, 3, 4 bounce into the close. And then Monday, bears are going to come right back in and gap it down. And if we see that, if we see a 1, 2, 3, 4 into a gap down, there's still a way here for that to have a bullish count save. But at that point, the bearish progression becomes much more powerful and much more obvious on the chart. And then at that point, probably the best that bulls are going to do next week is just a series of weak bounces as price cascades. So that's the earnings bomb, or maybe the negative Fed reaction. I should mention that as well. We're going to find out FOMC policy. Most pundits are projecting a 75 basis point hike. If that's already priced in and the earnings aren't so bad, then I think we set today wave 4 lows. And that is a consistent count here on SPX that aligns also with IWM and with QQQ. Okay, so another alternate. And this would just align with lower lows that I'll talk about on QQQ and IWM, but they have an invalidation point. If we get a weak bounce early in the week, that's then sold. But we find at some point, maybe mid to late week, maybe we need to get Apple and Amazon earnings Thursday out of the way, some support near 3,900 that could then project the market upward. Okay, so we have an easy plan. The plan is simple. If Monday there's no significant gap, we hold today's low, our bias is going to be up. We're going to look up first, unless we lose that low. Now, we gap down big. I've already talked about that increases red. We gap up in reverse, a lot like what happened today in some areas. Thinking about a stock like Square, for instance, that was a pretty nasty reversal. We gap up in reverse, and that is going to give either red or blue much more of a count in play, and then your bias has to be to the short side. Okay, we will go ahead and show SPY as well, because the count's going to look exactly the same. And I would also talk about here two things. No reason to guess. There was no reason, I think, to be long actively for any type of short-term options on the main indices or even individual stocks with earnings season. But you see this blue MA. So that blue MA, it's the 50-period MA, which essentially comes out to, on a 15-minute chart, about a half-day moving average. I really love it for just riding intraday trends, that's right at a potentially bearish 0.382 fib. So if we reject in the mid 3970s on SPX, you can see that. That's right around 396 on SPY. We reject there, we can get short. We get above it, we've got reason to think we might retest this weekly diagonal. So that weekly diagonal, there it is. And bears are going to say, oh, look at that. We've got another rejection, just like the beginning of May, and we're going down. Sure, I totally see it, and we'll be ready for it if that follows through down. But we get above it, and that's going to be right in line with about 399, and that is what unlocks the gap fill that didn't happen today. That's at about 401.5 on SPY. It's about 4018 on SPX, and that's what unlocks the minute 3 fib zone. Okay, so this is obviously either the good news is good news on the earnings reports, or the bad news is not so bad, kind of like what happened with Netflix and Tesla, and we go up. So we've got some great intraday, and we've got that internal structure that we look at. We've got that weekly structure that we looked at. And as I said, there's no reason to guess. Okay, think about how much intraday volatility there has been. Why in this market would you guess overnight, especially with short-term options? I mean, you're not a trader, you're just a gambler. I mean, look at the intraday volatility. Off this reversal candle, boom, first 30 minutes, and we rejected. And in my group, we were ready to get long because we looked at that open and we thought, oh, the market's going to shake off the snap crap, and we're going to move up and fill a gap, and we're going to get in that minute 3 fib zone right away. Nope. We had reversal candles, IWM, XLF, and then we knew immediately, get out of longs, and on this failed test here, that's when we got short. And so that's the ability to be flexible, not to be locked into a bias, and to have a plan that can go either way. Because if anyone out there says they know exactly where the market is going, they're just being foolish. Maybe they'll guess on a coin flip and they'll be right. There's no reason to do that. Let your intraday patterns play out. And that's exactly what we saw today. We've got a great plan for us to be ready to know exactly what to do on Monday. Okay, let's move into QQQ. So QQQ, we're going to look at the weekly. And on the weekly, you're going to notice a close above the 8-week EMA, right on, just slightly above our 13-week EMA on kind of a wide-body doji candle. So there's simply your indecision. We keep both the bear count and we keep the bull count in play, and we get into the daily. And QQQ just barely avoided, like SPX, engulfing. Well, you wouldn't call it a bearish engulfing. It's an outside bearish candle. It did not have the gap up that would have created that engulfing candle. It is potentially a topping candle. And again, we can't ignore that. But like I said, on SPX daily, if we are in the big bad red bear, we're going to know it. We're going to lose this cluster of moving averages, of which the 50-day is the lowest. And so obviously the most important, that's just below 293. There's no reason to guess. The market is going to tell us. So the short-term count, I always look for confluence. So I want the widest possible market-wide set of confluence. And that means I am constantly watching intraday all the main ETFs. I'm constantly watching SPX, SPY, which I think is the most significant market-wide basket of stocks, with QQQ, with ARKK, IWM. And you put all that together and you get adept at following those patterns, and you're going to know there's non-confirmation, so let's not get aggressive a certain direction. And in QQQ, you're going to see that it aligns with the same degree of SPX. And we need to do that because they actually bottomed a yearly higher low at different times. I think now they need to be in sync. So I do have this also within a wave menu at 4 of minute 3, just like SPX. There it is. The only difference is that minute 2 was set at a different point in time than minor 2. And that happens from index to index. They're all unique, but I do try to look for confluence to make sure that I am consistent. So there's a very, very clear invalidation level on QQQ that we would then use to confirm the red count. And this is where Elliott wave to me is just such a powerful tool. Within a larger degree wave 3, a smaller degree 4 is not allowed to trade into the price of wave 1. So we clearly have the price of wave 1 at 296.15 early in the morning on July 18th. If we lose that price next week, I think we can give the bearish red count a lot more probability. That would be following down from a poor weekly close. It would likely coincide with some bad news that the market actually takes as bad news. And so that's clear. We can move all the way down. Wave 4 can move all the way down as far as it wants towards that price. But at some point, we've got to have a bullish stick safe. So clear invalidation. Now, what about to the upside? What if all of these weekend puts that were just loaded and all of this fear and destruction talk over the weekend, what if it doesn't happen? What if the world doesn't end? I think we look again to that blue MA, just like SPX. What if this is a 1-2 and we gap up? Well, above 304. See that trend riding MA. That is why I like it. When we trend down, we're below it. We move up, we get rejected. If we move up and get rejected, we're going to know a trend is down. We recover it, we hold it, we move up. We've got a gap fill shot above 309, and we've got the minute 3 fib zone at about 313 for the 1.618. We're just going to be ready. We're going to be ready for anything. Continuing our journey market wide, I want to look at industrials because there was relative strength, although a red day, relative strength on the day in industrials. And you're going to notice potentially an important pivot recapture. So recapturing the 315 pivot on a weekly close above the 8-week EMA. Yeah, is that an ABC up? Sure. So the bears have some ammunition there as well. But as long as we're above that support, we've got the possibility on industrials for a really surprising extension. And this is a pretty compelling count. We've got a 1-2 with a 1-2, and now internally, another 1-2. Okay, so it looks to me like if bulls are going to resolve themselves and we don't get the expected nasty bearish move next week, you want to be long industrials. And I think DIA here looks like a fantastic play. I don't have the red count labeled, but it's obvious. This count cannot lose Thursday's low. Simple, simple, simple. You lose Thursday's low, we're looking market wide. This is probably the beginning of an impulse and not an ABC down to a 2. We lose Thursday's low, we're looking to short higher low bounces. XLF, also just extremely important. So we had follow through on financials, also back above the 8-week EMA. So see, bulls are starting to do the things they need to do to turn trend. I can't say with 100% certainty that the week before was a market bottom. I don't know. I'm just offering to use some evidence. We weigh that evidence together. We put it into a plan. We let the market decide. I'm not guessing here. So is this a topping candle? It certainly could be. So we are on guard. Again, we lose these daily EMAs and XLF 32. It's easy. That's a number to remember. You lose 32 on a close on XLF. It's a little bit higher than that, and we're beginning to wonder. That would be the sign of rejection on the daily chart into the short term. So interesting on XLF that if this was a 1, 2, 3, 4, that 4 traded into 1. Now, in the first initial motive or impulse wave up or down, 4 can trade into 1. So that doesn't invalidate the bearish move, but I would say it takes a little bit of strength of probability away. So I think we need to be looking early pre-market Monday. What are financials doing? And if the market's not just tanking with an end of the world gap down, I think financials could be helping us. And there is that weekly diagonal, similar to what I showed on SPY. It rejected twice. Big reason why we knew to get short today. Why we switched our plan and turned a red day into a green day is you get back above that, $33, we're going to give the market every opportunity to put in a surprising bullish resolution. We reject beneath the daily low today, and that's when we're probably looking for something that's not going to be good for bulls. And again, just like DIA, Thursday's lows are going to set the tone. So Thursday's lows, that's our reference here. That's going to be a lost nested 1-2 count. Okay, we get into now small caps. So I want to show you on the weekly. So on the weekly, 2 MAs captured. Nice week for small caps. Can it follow through? On to the daily. I'm concerned here. We do have a bearish engulfing candle. It was not a good day at all. Small caps showed their weakness early. And so will that result in a candle like what we saw here? June 28th is a pretty similar comparison. It would be within the same wave, an ABC up or a WXY, actually, how I have it. And so, yeah, we've got to be on guard. So we get a couple nasty days next week. We lose 175, and we're going to be looking. We're going to be on guard. That greatly increases the probability of fresh yearly lows. IWM, counting the same as QQQ, looking for consistency, looking for confluence, possible 0.382 fib for what I have as an expanded flat. So that would account for an impulsive move down. And under this count, we could actually go for another wave down, 1, 2, 3, 4, 5, if you choose to count it internally. But that price has to hold the July 18th high. Same as QQQ. This is 176.28. We lose that price, especially if we lose it with a big gap down and a bad day Monday. The best I think we do at that point is we look for a weak bounce to short. And that would be the red count there on IWM. Otherwise, there's that blue MA again. We get back above the mid 180s. We hold that and support it. We can get a gap fill that just missed within pennies a day. I thought it was going to happen up there in the minute 3 fib zone. We'll be ready. ARKK. Now, unfortunately, ARKK internally in this sideways movement for the last couple months is kind of forced into a count that I just say is more and more nested. So on this count, when we traded into the high of July 18, it did violate the most bullish immediate count. It doesn't mean that growth stocks have a bull count completely off the table. What it does mean is on the small time frames, I'm forced to move into a more nested 1-2-1-2. That still has probability here above the 0.618 fib at 45. And you're going to notice that long-term pivot here at 46, it did hold here on the close. So even though growth stocks by and large were punished today, it's still not out of the realm of possibility that we actually get a great reaction next week and we move strongly up in this white count. The bearish count here isn't labeled, but the bearish count would have this as a 3-wave move up, and then here are the lower fib targets. If we lose 45 first, that also matches the daily volume POC, and then we've got to start losing lower MAs. 42.77 for the 50-day, and that also corresponds to a loss of this nested low at 42.20. Okay, that's our main indices and ETFs. I think it's a very clear plan. I think a balanced set of evidence. There's no bias here. I can see it both ways. We're simply going to let the market tell us we've got a great plan and we're going to be ready. And if that appeals to you, if a flexible and let's say market agnostic point of view that knows how to adjust intraday appeals to you, and you're not a full-time subscribing member of Pikes Peak Trades, come join. Come join. We've got a great community. We're making a lot of great trades every single week. let's talk about individual stocks. We want to get through as many individual stocks as we can, and we should start with their big boys that are going to report mega cap tech earnings. And we've got Apple. Apple keeps marching up, not yet above all of its weekly EMAs, but it is not far onto the daily. I have this as a bullish progression. So if you're going to be bearish, Apple has to really turn on its head and just fall flat. I haven't not yet completed a minor 3, so that would be close to matching with QQQ. And into the small time frame here on Apple, I have today potentially completed an internal wave 4 that we have yet to reach this minor 3 zone. Now, Apple doesn't report until Thursday. Okay, so it's possible that we could get good market resolution all the way up into that, and we get into this 3 fib zone, and then Apple has a bad reaction, and we're down in a wave 4. Okay, now that's actually kind of planned for. I don't know the timing, but if the bullish case does work out, I've got another degree 4 pullback at some point. So I think there's also a chance that if we don't just go straight down next week, that we could still have some movement up and down like we had this week. So here you have this week. Here's Monday down, but then up, Friday down. It could be similar. So I do think it's going to just give us a lot of tradable opportunities. And certainly on Apple, we have our own set of invalidation. We would prefer this 4 not trade into this 1. That's not a hard rule because I have it within a final degree 5, but we look a little bit lower down. We really don't want Apple to trade into the high of minor 1 in the mid 143s, about 143.50. Okay, let's keep marching through big tech. Another name that reports Thursday is going to be Amazon. Amazon, not a good candle today. We've got that bearish engulfing candle. I think it's possible wave 4 isn't quite done on Amazon. So we get here into the small time frames. And, are we done with wave 4 at a shallow fib? Possible if the market just doesn't want to give bears the follow through on the daily. But I'm kind of thinking this probably needs to work a little bit more down. But again, such clear invalidation. Within this wave 3, cannot trade 4 into 1. That's at 116.99. So that's the July 7 high. If it's below 117, we're also then going to be below this MA. And so that's going to be confirmation that something much more bearish is happening in the general market. So let's keep plowing through. So we get into one of the snap crappers today. We got Meta down almost 8%. Thought maybe we'd get a bullish stick save on the open, grabbed a couple lottos, had some initial money made, didn't take enough off. That was one of my frustrating trades today. Got short elsewhere, but then I just should have just swung it down. And so Meta did today what I was talking about on the indices. It did something concerning. It lost all of its daily EMAs. So it is possible that Meta just needs to be avoided. I think for sure you just want to wait to see what happens when it reports here. It's going to report on Wednesday. I don't see any reason to be trading or speculating on this unless it can recapture some of these EMAs. But even then, I'm not one to take stock, equity position, or even options. I've quit playing earnings moves because I know there's always moves that you can get in. Take Tesla as an example. Yesterday, there was still plenty of opportunity to trade it. So unfortunately, it's just one that it's not carrying its weight and could absolutely be one to drag the market down. So we get into GOOG, and this is also crucial to the market. Also just got hammered today on the snap sympathy play. It's also not healthy technically. So I don't see a reason to try to bottom pick until GOOG is back above about 116. That's the daily volume POC. I've kept this nested bullish count on there just because it has 3 higher lows, but without getting another weekly higher high, it's not in high probability. We're going to find out how the market likes it after Tuesday. It's not going to take us long. Could easily send it down to 100 or below. on a negative reaction there. Let's keep going with Microsoft. So Microsoft has held some daily support here on its close. I view Microsoft as probably the most important. It is heavily weighted in SPY and QQQ. And we have, again, such a simple plan. It is Thursday's low. So this bullish nested count, a set of 1-2s below Thursday's low, is invalid. And if that happens before Tuesday, the setup to me does not look good. And I'm probably going to be tempted to think that we're going to get an earnings miss on the close and possibly playing this red count. Hold all of that. And I think there's a chance, especially above this 262 pivot, that we could get the bullish resolution. Again, I'm not guessing. The market's going to tell me. So we get a chance above that. The probability says I can go long. We lose that low Thursday and the market's being pretty clear. Last one is Tesla in big tech. And I talked about how there wasn't any reason to guess right here before earnings. There was a valid bear and bull count in play. And hey, a number of my groups said, I've got weekly profits. I'm going to swing a couple things. It's just gravy to me. And man, they nailed it. I would just point out to you, you didn't have to do that because you had an opportunity right here. We had an opportunity right in the first couple hours on Thursday to get long. And then boom, that went all the way up to my white diagonal, which was where I was telling my members right in there, 835, 840 is where you should profit. Okay, now with that said, is Tesla done? Did we get an ABC down? It approached that wave 4 area. Let's just see how Monday works. So it has a lot of room to move down before an invalidation. It's got to go all the way below 750. I think Tesla is one that could absolutely support the general market. And it's also one that I'd like to get back in. So if it holds all of this, I would probably take a shot on it to return back up at least to this weekly high. If it breaks above this white diagonal, we've got to break out. And I think we could see it up towards the high 800s, possibly even 900. Okay, let's keep working through individual stocks. There's just a lot of individual stocks I want to talk about. Here's one that, like Amazon, doesn't have a good daily candle, and that's Boeing. But clearly, this is the kind of technical trend that you are interested in. It's all above these daily EMAs. On the short term, though, I do think maybe it needs some wave 4 rest. So I was not willing to get long here. This could be a shallow wave 4 with market strength. It's a nice component of DIA. Maybe it does need to have a chance long for us to get up there above 165. So keep Boeing on watch because technically it's in good shape. We definitely want to talk about your semiconductors. So AMD, we've got AMD that had poked above Thursday, the 50-day SMA. It is not uncommon at all to see just that disappear. And it did right back beneath the pivot here at 89 and that 50-day SMA. Where is it in a wave count? I have a potential completed minor 4. Okay, so you can see this is counting really well. So 1 up, 2 down, an internal 5 to this 3 up into the 4. And I think like that short-term MA is there, you get this thing back above 89. And I think, why wouldn't you give it a shot? You've got tight risk against today's low. NVIDIA, I have it in the same count. So I have this as 3 top Thursday and a potential 4 that just came right back. Maybe it needs to work a little bit lower. So you saw AMD was below that 50 SMA. NVIDIA was not. So maybe within this, it needs to get a little bit lower. We've got some pretty good area right there, the top of minute 3. I think that 167 fib needs to hold. That's a probability fib there. Below that 0.382, we get worried. And then certainly we trade into this minor 1 level at 160. And I'm not real optimistic that market is going to support semis for continued bull movement. Others I want to show. There's a lot in growth I want to show you. So let's take a look at Roku. Now, Roku, even though it was demolished today on the snap crap, it's not in that bad of shape. We've just got a lot of potential basing here. It got rejected at a diagonal, and although that candle's pretty bad, it's still within range of saving these daily EMAs. Now, obviously, just like Meta, this is the danger sign. So we continue to reject under those, about 91 on the 8 EMA being the highest. And then we're probably looking for new yearly lows. And you're going to notice Roku reports. Actually, I believe that's going to be on Thursday as well with Apple and Amazon. It still does have a potential 1-2 nested count. So we're not ruling it out. I just want to be open, and we'll see what the market does with this one. Some more healthy ones, some ones that also have very clear invalidation. I'm going to look at Square and Shop. So although Square, the general market held it back on a potential breakout, just went right back to daily EMA support. And on Square, we just have an ABC down to a 4. But again, it's just so clear here. If the bullish nested count is going to work, 4 can't trade into 1. So we lose that high at 69.58. It's tight. That means your risk reward to go long in the bull count is fantastic. We hold it. There's your stop. But look at your upside. Potentially all the way up towards upper 70s or 80s. So Square is one you should have on your active trading list, as is Shop. Shop pulled in nicely to a 0.382 fib. There's a lot more give here because Shop had a massive week up until Friday. Its invalidation level is still that 4 into 1. That's at 34.20. So maybe a little safer to swing commons here on Shop, especially after the split. Just a lot more affordable. Option spreads and prices a lot more attainable as well for most people. We've got a key diagonal on Shop. So it needs to get strongly back above 39. And if it does that, I think we could see a big run into the 40s. Obviously, though, we've got impulse down worry. And so we kind of let the general market help us on Shop. And maybe it does need to just work back. You saw how much room there was in wave 4. It might need to work back closer towards some of those daily EMAs before it can actually find that support. A couple more I wanted to talk about. And let me see where they are. Yeah, I want to talk about BABA. Okay, so we look at a stock that's way above yearly lows, and we look at BABA with a potential 1-2-1-2, right back to a 0.618 fib. That occurred last week, Friday. Did we get another internal 1-2? So we get a stock that's already basing, potentially ready to pop that wedge and break out of daily EMAs. It has my attention that maybe today was another internal 1-2. So I was not willing to front run this, but we get BABA back up above where it closed Thursday. So we're talking 105, and I am interested getting long there, especially because it does not report earnings until the middle of August. So there might be a lot of room to run here into earnings if the general market can support. Another one I really like, I like Zoom. So we have Zoom similar, not quite as much of a movement off the low, but we've got a potential 1-2, 1-2, right back to test daily EMAs. It's got a daily volume POC that occurred right at today's high. So 113, we move above that, and we could see a strong move in Zoom. And I've got another diagonal that rejected here Thursday, Friday underneath it. We recover that about 109. I'm willing to give that minute to a chance to be in place. And a little bit like BABA, it doesn't report earnings till much, much later in August. So there could be the possibility. Just be open to it. If I'm wrong, we're going to lose that daily cluster. We're going to close gaps. The market's going to tell us. But we can support right here in that fib. Maybe we even support that open gap. That would be that open gap here from Wednesday. We could be looking at something positive in Zoom. Okay, that takes us through all the individual stocks that I wanted us to look at. Really good rundown of everything. Now let's look at some commodities and crypto. If you're not interested in that, you can just tune away right now. We're going to talk about oil, gold, talk a little bit about crypto. This is the only trade that I was willing to hold over the weekend. And this is an XLE put trade. I had presented this to you on Twitter, so going to put my money where my mouth is. And did we get a significant top here? A big gap down 1, a 3-wave move up 2, and then did we get the start? Maybe a back testing loss of support. And with this count on the table, in my mind, this was a risk I was willing to take. Okay, if I'm wrong, we're going to get out quickly because I've got these clear diagonals here that I'm using as some geometry reference. That's about it at 71.50. So I'll keep the stop level. I'll give it a little more room since I bought some time here. But I am looking at a potential move down, significant move down in energy. So we'll check back in on Monday and see how that looks. Let's move through and talk about gold. So was there actually a significant weekly bottom in GLD? It is the kind of potential hammer or doji that could set the low. Now, from a technical perspective, it's got a ton of work to do. It's really going nowhere technically until it gets back above 167, but I'm willing to consider here a pullback buy. So even if this is just a bearish bounce, an ABC up, I think is worth a short-term trade. It didn't quite pull back enough for me, and I didn't want more weekend risk to take anything long. But if it can support this 0.618 internal fib, I'm going to be willing to take a shot here on some GLD calls. We'll see how that one is going to work out. I've definitely got it on my radar. Now, how about miners? You know, I'm just not nearly as interested in those because I just don't know if that bottom is in. I don't know if it's giving me the very clear risk reward as GLD is. So I'm not looking actively to trade GDX or GDXJ. I'm going to have to see a little bit more on the upside to get me involved. The same is true on something like AG. So silver and miners have just been hammered. And I'm not willing to trade this junk. This does not look impulsive off the yearly low. Maybe it's going to give me a higher low, but it's got to give me another higher low above the weekly low for me to even get interested. I think there's just way too much work there left to do. Okay, we're going to finish with crypto, as we often do. And here on Bitcoin, we still have the potential of a nested bull count, just like SPX, just like QQQ. And so we're looking here internally, even with today's selling, it has not lost yet Thursday's low. Even if Thursday's low is lost, I think this 0.50 fib can hold. So I think even if we see weekend weakness in crypto, there's still enough support here. I'd be looking at 22,000 as pretty significant support for you to base any longs against. I'm going to give it a chance that this nested bull could actually play out. We get into the daily, and a lot like many individual stocks, you're seeing here daily EMA holds on Bitcoin. While that's in place, you give the upside the benefit of the doubt. Now, we lose that green one. That's right around that level I said. That's about 21.7, and things are probably not looking good market-wide. So always interested to watch crypto this weekend. That's going to be an early warning clue for Monday. Other ones, not real interested in XRP, although it is above daily moving averages on the weekly. It is not. And I, in general, can't get excited and long much when things are below all weekly EMAs. What I'm a little more interested in is ADA. So ADA pulling back into a potential bullish fib zone. It hasn't yet broken out on the weekly, so I don't want to be too contradictory. I'm not offering you a buy signal. I'm just saying from the bottom, a potential 1-2, it does have to confirm a weekly close, which is about just a little bit above 50 cents for me to get interested. But I'm going to offer possibility that we could be seeing some movement in crypto if we get the positive general market resolution. Okay, gang, so that's everything. A little bit longer today, but I just thought it was so crucial for me to give you a lot of info and talk a little more detail about a trading plan. And here we'll finish just with the SPY 15-minute chart. We know exactly what we're looking for. So we hold today's lows. We're going to give it a upward movement a chance. We reject here. So a gap and crap like today, we're going to be looking to get short. And of course, we have that invalidation that is crucial on QQQ and IWM right there. So we lose the July 18 highs on QQQ and IWM, and I think we're looking at an increased probability of yearly lows. So there you have it, gang. Happy to do this for you. Happy to share it. And like I said, if you want to join an active weekly Discord, I update the blog and charts throughout the day, regularly interacting with members, trying to get us in the best trades to manage a difficult market. Come join pikespeaktrades.com, sign up. You got a lot of options for what you're interested in. And let's just see where it goes. I think next week's going to be an incredibly exciting week, and we're still looking for the market to show its full hand. I think we're going to get it. Plenty of news for us to get that resolution. So have a great weekend, gang. Hope you enjoyed the weekend video, and check in again with you on Twitter and with my group Monday pre-market.